Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Business Lunch. I'm Nisha Podar and with me is my colleague Manglam Malum. Manglam, good afternoon. It's a weekday of trade. In fact, the markets after a long weekend have got off to a weakish start. Nifty 50 as well as Sensex down over 1% each, and so is the mid-cap space. But as far as the ones which are not taking as huge a knock as far as the rest of the frontline indices is the banking sector. So SBI, Kotak Mahindra Bank really keeping the banking stocks alive, and the other counters which are really going against the tide and are still in the green and gaining are the IT counters like TCS as well as Tech Mahindra.
That's right, Nisha, but you know, the one stock that I would like to pull up right now is Reliance. The index heavyweight right now is virtually at the low point of the day, dragging the index lower. The Nifty itself is closer to the lower end of today's trading session. We have the oil marketing companies giving it company as well. IOC, HPCL and BPCL, all of them have slipped to the low point of today's trading session. Interesting levels to watch out for the Nifty. Of course, we opened below the 100-day moving average, and now while we're at the low point of the day, the one level that we'll keep an eye out on is the 10,276 mark, which is the 2018 low for the Nifty. And while the Nifty bank is outperforming, remember it is perilously close to its 200-day moving average of close to around 24,737, just about 7-8 points away from that. And the 2018 low was made today. So those are the two levels we'll be watching out for in today's session.
All right, let's do a quick check on the global market action as well. And Asian markets, they closed in the red as Chinese leaders really headed to an annual parliament meeting. And the Chinese premier announced 2018 growth target for the country at around 6.5%. Now in the European markets, the main focus will be on the Italian markets following an uncertain initial election result, which really indicates that the country is set for a hung parliament. So political developments there an overhang, and meanwhile other major European exchanges are expected to begin the week trading with a mild opening today. That's what futures are showing at this point.
All right, we'll keep an eye out on that, but let's go across to the big CNBC TV18 exclusive. ArcelorMittal has signed a joint venture pact with Nippon Steel and Sumitomo Metal Corporation to jointly acquire the assets of SR Steel. The company's arm, ArcelorMittal India, has submitted a plan for resolution of SR Steel on February 12th. Anshu Sharma caught up with Brian Arana, the executive vice president of the company, to get more insights into the bid, and here's what the management had to say.
In terms of getting into India, you know that we had some significant plans for a greenfield facility back in 2008, but the economy went awfully negative after that, and since then it's been very difficult to justify the capital cost of doing a greenfield facility in India. So we've been looking for various alternatives, and now we find some assets have come up for sale. So it's an opportunity for us to take advantage of that.
Which are the assets that you have bid for?
We've put in a bid for SR. It's our main focus in terms of the distressed assets that we've looked at. So we are focused on that one and hoping it will turn out well for us.
ArcelorMittal is known for a turnaround of distressed assets. So how much time do you think you'll take to turn around the SR Steel's Hazira plant?
I think turning it around is probably one way of putting it, but to take it to its nearer to its nameplate potential is probably a better way to put it. It's been running in a near bankruptcy mode for quite some period of time, so the previous management was constrained in what they could do. We will be free of those constraints and can probably within a year's time show significant progress, and within 2 years you know, much more progress than the current level of performance of the plant.
Okay. So ArcelorMittal is known for world-class facilities. So what are the changes that we can expect if you win the bid for the SR Steel plant? And if I can also ask you, what equity value do you see in SR's steel plant?
Well, first of all, the changes that we will make in the plant are something that I'm not at liberty to discuss, because it's part of the resolution plan we have submitted, and we are subject to some confidentiality clauses in that process. So hopefully you let me respect those.
Yes.
And then with respect to what we see as value, you know, we are a global company, and India is a growing market. So it's one of the markets that's probably going to have the most rapid growth in the next few years. And it's clearly of interest to us to be participating in the growing markets. We are producing 95 million tons of steel in a number of countries around the globe, and this was one place where we didn't have a good production facility already. So it fits into our strategy of being a global player and taking a major role in growing economies where we can.
I have a couple of these IT stocks. While most of the IT stocks are moving higher, the biggest weight on the index is Infosys, which is closer to the lower end of today's trading session, adding a bit of pressure. So there we have TCS at virtually at the high point of the day, and we have Infosys at the lower end of today's trading session, dragging the Nifty lower as we speak. But we have a lot of stocks in focus. The biggest loser is Aurobindo Pharma. That stock is under pressure after the US FDA has issued Form 483 to the company's Unit 4 with 9 observations. Let's get Ekta to understand more about it. Ekta, what is the nature of these observations?
Well, I'll take you through the news on Aurobindo Pharmaceuticals. Now, over the past long weekend, the observations or the Form 483 which was issued to the Unit 4 was basically accessed by us. Now, remember that this particular Unit 4 is an injectable facility, and it had received 9 observations from the US FDA in the inspection which had taken place in Feb of this year. To put it into context, the last inspection, the company had received 7 observations for this particular facility. It was inspected in April 2017, and post that they have seen some amount of recalls which have been initiated by the company from this plant as well. So the context of these 9 observations in any case become a bit precarious. Now, if you look at the observations themselves, most of the analysts are of the opinion that no, there is no data integrity, there is no OOS or out of specification observations, but still they are procedural or largely procedural in nature. However, I have had some conversations with some industry experts, and they are of the view that yes, you know, while there might not be, say, data integrity issues that you're talking about, a kind of response that Aurobindo would have to make on these particular 9 observations becomes critical in terms of the way forward for Aurobindo and what would happen to this particular unit. Having said that, it is expected that at least for some time there could probably be a delay in terms of approvals from this particular facility, if not an escalation. Now, that is, remember, the opinion of a certain number of people. It again depends on how exactly Aurobindo would respond to these 9 observations. Like you mentioned, the likes of Credit Suisse are quite confident on this, and they've upgraded the stock to outperform from neutral because they do expect that these observations were better than what was anticipated.
All right. Thanks, Ekta, for getting us all the details on Aurobindo. Now, 2 stocks on our radar are Thomas Cook as well as Quest Corp. And Thomas Cook is surging on the back of the recent development, and Quest Corp is on the lower side. Let's put all of that into perspective. We have with us both Nimesh and also Mangalam. They both will be putting all that into perspective. First on Thomas Cook and the announcement, Nimesh.
So, Nisha, over the weekend there was an announcement from Thomas Cook suggesting that the company is considering distributing its shareholding in Quest Corp directly to the shareholders of Thomas Cook. Now, what this means is, right now Thomas Cook owns 49% of Quest Corp. If you look at the current market cap of Quest Corp and the value of Thomas Cook in that works out to close to 6,700 crores. If you exclude Quest Corp from Thomas Cook's current market cap, then the other 2 businesses, which is the travel and forex business and the Sterling Holiday Resort business, is valued at close to 2,800 crore rupees. Now, why the stock is surging is, one, with this transaction, if it goes through, this will mean that the holdings discount that Thomas Cook was getting will get vanished, because now there will be now all the shareholders will have a direct access to the Quest Corp shareholding. So that is one reason why the stock is buzzing in trade today. The other reason is, if you look at the travel business and the Sterling Holiday Resort business, remember Fairfax, which is owned by Prem Vatsa, they bought the travel and forex business way back in 2012 for 1,000 crore rupees. On top of it, they acquired QNE for close to 700 crore rupees. So 1,700 crore has gone into the travel and forex business. Fairfax bought Sterling Holidays for close to 900 crore rupees, including the debt as well. So if you add this both together, the price what Prem Vatsap paid for these two businesses is what currently the market cap is for Thomas Cook. So right now, market is not giving any value or any upside to either of the two businesses because both are underperforming and expected to do well over a period of time. I was looking at the IIFL note today morning, and they feel that X of Quest Corp, with the kind of valuation that Prem Vatsap has given to these two companies, the fair value should be around 280 rupees per share for Thomas Cook. Having said that, they expect over the next 2-3 years, both these businesses to turn around and get a fairly higher value for both the businesses. In fact, if IIFL, for IIFL, the bull case for Thomas Cook over the next couple of years is it can go to between 330 to 360 rupees, given the kind of businesses they have right now. But the reason why Thomas Cook is up today 7% is simply because the holding company discount will vanish, and now all the shareholders of Thomas Cook will have a direct exposure to the Quest Corp holding.
Oh yes, Nimesh, that has been one important theme which is driving that particular counter holding company discount to go. The stock is 6.5% up, but the markets haven't taken that particular news very well as far as Quest Corp is concerned. Mangala.
That's right. So, the reason why Quest Corp is lower is because the street believes that there would be a lot of supply. However, that stock has come off the low point of the day. So Thomas Cook, as Nimesh said, will distribute the shares in Quest to other shareholders. Just putting the numbers in perspective, Thomas Cook currently holds 7.13 crore shares of Quest Corp, and that will be distributed to the existing Thomas Cook shareholders. So the number of existing Thomas Cook shares is close to 36.7 crores. Just doing a simple arithmetic, also got some confirmation coming in from Ajit Isaac. So Thomas Cook shareholders will receive 1 share of Quest Corp for every 5 shares if we just do a basic calculation. So what does that mean for both the share prices? First one, just multiply that by the current market price. Thomas Cook 5 shares worth around that 1300 rupees mark, while Quest Corp 1 share is worth around 950 rupees at current market price. So that arbitrage should come off. The other thing is the promoter holding. Fairbridge Capital holds 67.6% in Thomas Cook, and Thomas Cook holds 49% in Quest Corp. So Fairbridge Capital's holding in Quest Corp will now become direct via this restructuring, post-restructuring, rather than holding via Thomas Cook itself. So what happens is that the company's free float market cap, that increases. Thomas Cook currently holds 49%. Post this, Thomas Cook won't hold anything, and Fairbridge Capital will hold 33%. So the promoters, which own about 71.6% stake, will come down to about 55.7%, thereby increasing the free float. Maybe some institutions will be looking at it.
All right. So those two stocks on the back of this news development are on our radar. HDFC Bank is below the 200-day moving average. So that stock is on our radar at this point. Remember, there have been news reports of some QIP fundraising as well, but not at these levels, I'm sure. So that stock will be in our focus, and also the overall markets, they have really weakened in the last few minutes. Now, moving on to the business of the government, and the budget session in the parliament resumes today. However, protests stalled the session as expected. Rituparna Bhoyan joins us on the phone line with more details. Ritu, when is the parliament expected to resume? Will there be any business, given so much hullabaloo, and also given that there is clearly focus on Nirav Modi scam, and also it's considered to be an election year, so lots of political developments as well?
Well, I wish I could answer your questions. Not a good start to the second leg of the budget session. There are multiple issues, but because of this disruptions, Lok Sabha has been adjourned till tomorrow. Rajya Sabha has been adjourned till 2 p.m. and there are no indications that any business will be conducted even after 2 p.m. There are 3 specific issues, amongst other issues, which I would like to talk about. Firstly, of course, it is the Nirav Modi issue, on which the Trinamool Congress started protesting outside the parliament before both houses started business today. Of course, in Lok Sabha, it was TMC, Congress, and other opposition parties which raised this issue, and business was not transacted, and hence Lok Sabha was adjourned. But that was not the only issue. Even NDA, LI, PDP MPs, they were in the well today asking for some commitment on the Andhra special package. This issue has been ongoing since the start of the budget session. There was some assurance given by the finance minister, but I guess PDP wants a strong assurance, and we have been told that PDP MPs will be meeting Amit Shah on this issue. Last but not least, a Kartik Chidambaram issue was raised by BJP in Rajya Sabha, and as of now, we do not see any indications of both the Treasury and the opposition benches sitting down together and conducting business in Parliament.
All right, Rituparna, thanks a lot for that. We'll slip into a short break, come back, we'll focus on the markets, also talk about the 90th Academy Awards that were announced.
Looking at the markets currently, weakness really persists, but at the moment, some of the big counters are really making it into the green. The types of Sun Pharma, even Cipla is making an attempt, is flattish at this moment, and even auto major Mahindra and Mahindra. Keep an eye out on these counters. But now let's straight go away to another big story of the day. The US is likely to impose import curbs on steel and aluminium, and that's the reason why our metal counters are down and out today. And we spoke to Jeffrey Dennis of UBS to really understand the impact of this big move on the Indian sector and how it will really play out. Take a look.
Tariffs on steel and aluminium they're important for a number of countries, but they are not that important if the biggest potential flashpoint in terms of trade conflict is between the US and China. So within the emerging market space, they're very important for Korea, for Brazil, for Mexico, and of course in the developed market space for Canada. This is a risk to the bull market that we're still supporters of, because if this does escalate into serious world trade conflict and some countries will retaliate against these tariffs, well then that does pose a threat. I don't think China's going to react that much to this.